Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade today. We'll get you expert views as to where are the opportunities emerging for you as an investor to buy into the equity markets today. But first up, a quick check on how the broader markets and the benchmark indices are doing at this point in time. The Nifty and the Sensex are up in trade today, albeit it's just about a flat to a positive bias after a strong move yesterday, but we're still holding above that 18,600 mark on the Nifty. So with 17 points of a gain, 62,865 still being held on. Remember, yesterday we briefly touched that 63,000 mark, but there's been slight profit booking after that in the markets as well. Let's look at how the broader markets are also doing. The mid-cap and the small-cap 100 indices slightly better off than the benchmark indices, but just about 1/10 or 2/10% higher for both these indices. Now, when we talk about the sectoral action in today's trading action, you will be able to spot that the Nifty Bank has actually turned negative. About 0.1% of a decline is what you can spot, despite the positive opening that we saw. The FMCG stocks are doing well. In fact, they're trading at the day's high with 0.78% kind of a move on the upside. We're also seeing some of the other sectors like the IT space that's doing slightly better, just about 0.2% up in trade. Media stocks are doing well. The realty just flat with a positive bias. Private banks and even the healthcare index is slightly positive, but the other sectors, including the financial services, the metals, for example, pharma stocks, for example, all of them are trading with slight losses in today's trading action. In terms of the specific stocks and which are the stocks that are actually gaining strength in today's trading action, ITC, that continues to top the charts with 2.3% uptick, continues to hover near record levels again, and the shares turn ex-dividend today. We'll focus on that as well. JSW Steel, Ultratech Cement, HCL Technologies, the other gainers at this point in time. On the flip side, you do have Hindalco, which is under pressure, Coal India, Tech Mahindra, Dr. Reddy's and Sun Pharma, the other stocks that are lagging behind in the trade today. But let's welcome our guest on the show. Nilesh Jain joins in from Centrum Broking. Welcome, Nilesh, and thank you so much for taking the time out for this discussion. Well, yesterday was a strong day for the markets and it was a very strong start to the week. But again, we are seeing some kind of profits or some pressure for the market, some kind of resistance for the markets around that 18,600 mark. What is your own sense as far as the markets are concerned, both for the Nifty Bank, which touched an all-time high yesterday, the Nifty, which is slightly still away? How long will it take for the markets to really reach that record levels again, and what will it take for the markets to really reach those all-time high levels?
Very good afternoon to you, Sakshi. See, yesterday we saw a gap up opening, and today as well, if you see, the Nifty index is respecting that particular gap. So that gap area is acting as a crucial support zone, and it looks like a sort of a breakaway gap. Overall, the trend continues to remain on a positive side. The major structure is still looking on a positive side. Yesterday, we saw Bank Nifty hit a fresh all-time high. On Friday, we saw Nifty Mid-Cap Index hit fresh all-time high. So the broader markets are showing some sort of a strength. The undertone continues to remain on a positive side. It's a matter of time before we see Nifty also hitting its previous all-time high mark of 18,888. So overall, at current level, it seems like there could be possibility of some sort of profit booking, some sort of consolidation that cannot be ruled out. But I would suggest, if at all we see any sort of decline, that could be a good opportunity to make a fresh entry on the index side, on the long side. And the important support, if you look at, we have seen some positive development on derivative front as well. 18,500, 18,600 in today's trading session is witnessing fresh put writing, whereas on the call side, 18,700, 18,800 strike are witnessing a fresh call writing. So overall, it looks like a very tight range from here on. 18,500 to 18,700 could be 200-point trading range for the Nifty index for this particular week. But once this consolidation gets over, I believe that in the June series itself, the Nifty is likely to hit its previous, likely to test its previous all-time high. And on the other hand, if you look at the Bank Nifty, which is constantly making a high top and high bottom formation, and back-to-back for the second consecutive session today, it seems like it is forming a doji candlestick formation that basically indicates indecisiveness among the participants. So there could be possibility that we might see some profit booking in the Bank Nifty as well. But as long as it trades above 44,000, which is acting as a psychological support, the outlook continues to remain on a positive side. The upside is very much open for 44,500 and 45,000 for the June series. Lastly, If you look at the entire rally that we saw in the Nifty and Bank Nifty in last couple of months, the volatility index have witnessed continuous decline, and it is very much in the comfort zone. It is not indicating that we are likely to see any major downturn from here. So at current level, at 12 level, I think it is very much in the comfort zone. The focus should be on stocks and sector specific action.
Okay, stocks and specific action is likely to be the focus. So let's actually focus on some of those stocks that are buzzing in trade. Let's talk about ITC. Now, this has definitely been a big outperformer in the stock markets, both in the last year as well, and it continues to be in FY23 as in 2023 calendar year as well. Now, apart from this, we've been seeing that the stock is again and again, touching record levels, hovering near those levels, and there seems to be nothing that is stopping this kind of a rally right now. Be it the earnings, the kind of movement that we've seen from the underperformance, and now there is also the factor of dividend payout as well. The stock has turned ex-dividend today, which actually means that the stock price will get adjusted for the dividend payout. It's also the record date, and remember, the board of the ITC will determine the names of the eligible ITC shareholders for dividend also today. Now what we will see is that the ITC had earlier this month announced about 6.75 rupees kind of a dividend for FY23. Then there was a special dividend that was announced of 2.75 rupees for this year, and if one adds these two dividends along with the interim dividend that was paid of 6 rupees per share, that the ITC had announced in the month of February, all of it put together for FY23, the total dividend payout would be 15.5 rupees per equity share. So that's like a considerable amount. Nilesh, I wanted to take your thoughts first on what should investors do when the shares have turned ex-dividend, and how do you see the outlook on ITC despite the kind of 50-60% kind of a move that we've already seen in the last 1.5 years. How much more steam does ITC have?
See, there is no doubt about it that this particular stock has been one of the outperformer in the Nifty FMCG basket. And if you look at the chart as well, it is constantly forming a high top and high bottom formation, trading in uncharted territory, and the trend continues to remain on a positive side. Even if you look at the momentum indicators and oscillators, which are still very much in the buy mode, but certainly it looks like it has gone into slightly overbought territory. There could be possibility of some sort of profit booking, but I would advise to go long if at all we see any decline below 440 or 430 sort of levels. The upside is still very much open for 470 to 480 on immediate basis. And little positional point of view, if you see the 500 sort of target could be seen in next 4 to 6 months. So structure continues to remain on a positive side. Even if you look at in today's trading session, if you look at the derivative data, 5% OI, fresh OI has been added. So long side build-up is happening in this particular counter. So that clearly shows that at current level as well, the data are turning slightly on a more sort of a positive side. So I would advise those who are already holding the long position continues to remain long. Keep a trailing stop loss below 440 on immediate basis. The target comes around 470 to 480 and then 500.
Okay. Apart from this, one more company that's in focus because it has turned ex-dividend also is Vedanta. Now, we do know that apart from the ex-dividend, there are a lot of news flows that are impacting the stock as well. The stock is trading down, in fact, in trade today. About 5% of a cut can actually be seen. And that's also because there is news that the promoter has pledged 4.4% equity to borrow $250 million from Glencore. That's another piece of news that's impacting the stock, prices today. Nilesh, how are you studying the kind of move that we are looking on Vedanta and the news flows that are coming about? On the one hand, it's the dividend news, and on the other hand, it's about the share pledging news.
See, first of all, if you look at the dividend, it has a good history of giving good dividend. Even in the last year, we saw dividend yield of more than 12-13%. So that's certainly a positive sign. And even if you look at the technical chart structure, this stock has been in a consolidation mode in last 2 to 3 months, where it has faced resistance near about 300 mark and finding support near about 265 to 270 zone. So after this sort of decline, the dip that we are witnessing, it is again entering the buy zone. So any decline from here could be a good opportunity to make a fresh entry on the long side, keeping a strict stop loss below 265 in the spot. Once again, we might see a gradual up move towards 300 to 310. So from positional point of view, I think this is a good entry level, and any decline could be a good opportunity to make a fresh entry. But the time horizon should be slightly from a longer term perspective. Let's say from 6 to 8 months point of view, if somebody is looking to make a fresh entry, the upside could be 300 to 320.
Okay, understood that as well. Another stock that I wanted to take your view on is, the stock which is the largest listed stock on the exchanges, and that is RIL. Now, yesterday we saw the market cap of the company crossing 17 lakh crore rupees as well. This stock also has been, of course, a huge wealth creator. Investors, analysts, everybody has been believing in this stock for years now and decades as well. The kind of wealth creation this has done. Of course, RIL is now going through a sea of change. It is, a period when we are looking at more expansions coming through, the entry into various areas, newer areas as well, be it FMCG, be it retail. Of course, telecom we have already seen expanding for the company as well. How are you looking at the outlook for RIL for those investors who may be wanting to enter afresh into RIL for some long-term period as well? Is this the right time to get into Reliance Industries stock?
Well, there are two ways to look at it. So if somebody is looking from trading point of view, we have already seen a spurt in last 2 to 3 trading sessions from 24-20 to almost 25-20, 100 point move has already been passed. So from trading point of view, I think one should wait for some sort of a decline. Then probably the risk and reward will turn favorable. The stop loss should be placed below 24-20, and the upside is still open for 25-60 to 2600. The another way to look at it is slightly from a longer term perspective. The stock has hit the previous all-time high mark of 2800 to 2050 zone, which was seen in the year 2022 April month. So in last 1 year, we have seen a good amount of consolidation, and this has been the history for the Reliance Industries. Once this stock surpasses this consolidation zone, we see a major breakout. So at current level, from positional point of view, I think it's providing a good entry level. Keep adding on declines from position point of view. I think 2800 to 3000 could be seen in next 8 to 12 months. Even if you look at the Nifty structure, which is looking slightly on a positive side. So if Nifty has to hit a fresh all-time high, then Reliance needs to play a bigger role, and which is very much likely that Reliance will lead the rally from here on, and we might see the levels of 2700 to 2800.
2700 to 2800 on Reliance Industries, we may be able to see those levels as well. Apart from this, Nilesh, in this current market scenario, when we are seeing that the bulls are perhaps on a better footing than earlier in the last 3 or 4 odd months that we had seen of this calendar year, what is your sense of the themes and the sectors that may outperform for the rest of the calendar year now?
See, from sector specific point of view, if we look at the cement space, which is looking very promising, and counters like Ultratech Cement, Birla Corp, so little mid and small cap counters from cement space are looking very much on a positive side. So watch out for counters like Ultratech Cement, India Cement, and also Birla Corp. So Birla Corp specifically, we are very much liking is because it has given a good breakout from a triangle formation, and upside is very much open for 1150 to 1200. And at current level, if somebody is buying, then keep a stop loss below 1020. So that particular counter is also looking positive on the chart. Apart from that, if you look at see metal.
Right. All right, so I guess there is some kind of a technical glitch that we are facing. We'll try to connect back with Nilesh at this point in time, but he did say that, cement pack is something that he is really bullish on at this point in time. He was mentioning about Ultratech as well, where there is, again, a 1% upside. So that as a particular theme is something that he may be watching out for in the near to medium term perspective. Apart from this, we've already discussed about, stock specific opportunities like in ITC, in Reliance Industries, and in Vedanta. Now, two of these stocks have already turned ex-dividend today. Now, both are actually trading contrasting, whereas ITC is actually just flat at this point in time, also hovering near its all-time high levels. It's Reliance Industries that's actually holding up at 0.06% upside at 25.22, but he does believe that 27,2800 kind of levels can actually be seen on this one as well. Apart from this, a whole host of other things are very important for you to track in the markets today. We're also seeing some bit of a move as far as the real estate pack is concerned. Remember, that has been showing some kind of an uptick right now. In case if you look at the entire realty pack, we've actually seen a whole host of, buying action here on the back of the pre-sales in the luxury pack that we've been seeing some robust numbers coming through, and them these pre-sales volumes really bumping up the earnings also for the realty pack in the just concluded quarter as well. Now, a whole host of opportunities in the affordable housing business is something that the investors are keeping a keen eye on. So that's something that you should keep on your radar as we speak as well. All right, then, and we will end this show right here, but do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. Until then, many thanks for tuning in.
Hello and welcome to Business Today Television. I am Siddharth Zarabi, and with me today here at the BT Studios at Goa Fest is Ravi Santhanam, the Chief Marketing Officer of HDFC